What is up, boys? This is video 4 of Jacyb's Bootcamp series. Today we're going to be going over draw on liquidity, bias, and time frames and time frame alignment and how all of that sort of stuff works. So let's get into it. First of all, we're going to start off with draw on liquidity. What is a draw on liquidity? A draw on liquidity for me is a target on the day that I want to see be reached, and on the process of the target getting reached, I am trading towards that target. This target could be anything from a session high and low, a data high and low, an unfilled fair value gap, or a midnight open. These are all things that you guys probably don't know, you may know, but I'm going to explain to you right now what all of them are and why they're high quality draws on liquidity and what ones I tend to target the most. So first thing, coming into the day, I'll look for my draw on liquidity. Do we have any high quality draws on liquidity? For session highs and lows, in the previous video I showed you this indicator, which shows you session highs and lows. If you didn't see that video, this is the indicator, ICT, kill zones and pivots, Asia highs, Asia lows, London highs, London lows. So the highest quality draws on liquidity that I have found personally for myself is a London high, a London low, Asia high, Asia low, previous day high, in New York session, they're high and low. So these are very good magnets and draws on liquidity because for some reason the market wants to move, sweep this liquidity and meet the previous Asia high session or low, or London high session and London low of the session or previous day. High or low. I'm going to say high and low a million times in this video, but for some reason it's a magnet on price. I have no real logic to why it's a magnet on price, I'm not going to lie, but I know that price wants to come and move and take out these draws on liquidity. As you can see in these being draws on liquidity, they're pretty wicky highs and lows. Like if we have a look here, Asia high, Asia low, pretty wicky high and low. Wicky, I mean like pretty prominent like highs and lows in the market. It's not just like, this wouldn't be a really good high or low in the market because it's just a continuation in trend. Although it did get swept. Although it did get swept, that wouldn't be the highest quality one. But I'm sort of just going off on a tangent. Highest quality draws on liquidities, 4 session highs and lows are these 3. That's for sure. Hopefully that all made sense to you without fucking overloading your brain or anything. The less high quality targets for session highs and lows are New York lunch and New York PM. You're never really seeing a New York lunch and a New York PM high or low get met by the next day. Like you're not really seeing it get swept the next day. I mean, like we did see it get swept this next day, but we also took it pre-market before the market opened. So it's not the strongest draw on liquidity, but it's still pretty high quality. Like if you see it and it's like, yeah, like you could take a trade to there, but just mainly look out for these 3. Next, data highs and lows. What are data highs and lows? I haven't really gone over this with you guys in the market, but data highs and lows are red folder news that moves the market a lot. So we head over to Forex Factory, we will see that there's lots of red folder news. The main 3, or actually 4 now, because I just read that, FOMC. The main 4 red folder news that will move the market a lot and give you a really high quality draw on liquidity will be CPI, PPI, NFP, and FOMC. PPI, I have no idea really what any of these are. I'm not going to lie. Like, I know this is like consumer price index. This is something or other. But as soon as it gets released, it moves the market hundreds of points up and down, and then usually leaves a really good wick high and low. Let's have a look at last week. What CPI did last week. Okay, perfect example. If we have a look over here, last week we had CPI at 8:30. News always gets released 1 hour, or at least this red folder news, CPI and PPI, always gets released 1 hour before the market opens. So always 8:30. If we have a look here, March 11th, down at the bottom here, March 11th at 8:30 a.m. This was CPI getting released. It created a huge wick high. We can see very abnormal kind of high in the market that price is attracted to. Don't tell me why it's attracted to the price. I know that price really likes to go to those highs and lows. Been back tested, everything. Just trust me. It wants to go to those highs and lows. Very high quality draw on liquidity. And the next highest quality draw on liquidity are unfilled fair value gaps. I haven't really gone over fair value gaps with you guys. I will be in the next video, I do believe. If you guys do know what fair value gaps are, unfilled 4-hour and 1-hour fair value gaps, very strong draws on liquidity. Price is attracted to imbalances in the market. The fair value gap is an imbalance in the market, so price will want to trade back into that imbalance. So our goal is to find a trade once that imbalance is sort of confirmed to us. Once it's confirmed, we want to find a trade to that imbalance. And then midnight open, market opens like this. I'll try and go over more in the fair value gaps video. But the 4 and 1 hour higher time frame fair value gaps, unfilled fair value gaps are very good draws on liquidity. I feel like I'm just frying my brain at the moment, like absolutely frying it, just saying all these words over and over again. But unfilled 1 hour and 4 hour fair value gaps, very strong draws on liquidity because they're on the higher time frame, and also the daily unfilled fair value gaps. You don't see them as often, but they are very strong draws on liquidity. For less high quality draws on liquidity, we'll be looking for an unfilled 15-minute fair value gap. Very strong draw on price, but not as high quality as the 1 hour and the 4 hour draws on liquidity. I need a break for a second. Alright. Next we have midnight open. This is like a less high quality draw on liquidity. Like it's one of these, a less high quality draw on liquidity. Is midnight open. So every single day the market opens, the market is forced to obviously trade through midnight. Let's see if I can find one. Here we go. Midnight. 12 a.m. New York AM session time. New York AM session. This is a very strong draw on liquidity. Prices attracted to going to the midnight point. No idea why. Once again, I have no idea why any of this happens, but I know it is high quality. I've back tested the system and everything. But if we go and find it again, like if we go to midnight, where is midnight? Midnight is down here. Price is attracted to midnight. We came to midnight. It's also like sort of attracted to midnight open. Even if we've been through it straight away, price will still come down to midnight open. Price will go down and move back up to midnight open. Very strong draw on liquidity. Couldn't tell you why. Just know that price wants to move there. Next, we're going to go into bias. Are we bullish or bearish, or are we ranging or consolidating for the day? This is very simple. Are we going up? Are we going down? Alright, so we are trading New York session. Pretend we have a very strong draw on liquidity. We've identified a high quality draw on liquidity, a session high or a session low, Asia high and low. This is high quality. So we've identified that this is a high quality draw on liquidity here. This New York AM session opens up. We come a bit higher, we retrace lower, then we move to this high quality draw on liquidity. Our bias for the day is bullish because we are creating higher high, higher low, higher high. Very, very simple structure. I taught you it in a previous video. Bias is bullish. I am personally a little bit biased to having a bias because I think we could flip from bullish to bearish in an instant and then also find a high quality draw on liquidity to be bearish. But you have to just have that in the back of your mind that we are more likely to go up on the day because we have more high quality draws on liquidity than we are to go down. So that would make us bullish on the day. Vice versa with bearish, and then obviously ranging and consolidating. We are seeing price just go back, forth, barcode, barcode, barcode. We are ranging and consolidating. We don't really want to take a trade there because price is uncertain. We could see price move to a higher quality draw on liquidity up, and that could be very good, very possible to trade, but we want to stay out of trading, ranging and consolidating. Okay, next, time frame alignment. All the time frames I use personally. For high time frame bias, I need to add daily on there as well. But 4 hour, 1 hour and 15 minute. If we have a look up here, we have the 4 hour. This is where we look for draws on liquidity, unfilled 4 hour gaps, unfilled 4 hour fair value gap right here. Good draw on liquidity, another unfilled 4 hour gap that will occur soon right here. Vice versa, 4 hour high in the market, another 4 hour high, another 4 hour high. All pretty strong draws on liquidity. Along with also the 1 hour, we look for the exact same sort of stuff. Everything on the 4 hour to 1 hour to the 15 minute is all sort of the exact same. It's all very, very similar. The way price obviously is moving because it's just the chart just scaled in. So like the 4 hour, this is one 4 hour candle. This is one 4 hour candle. This is what price did in this one 4 hour candle. And that's the same thing with the hourly. Price moved all this way in 1 hour. Price moved all this way in 1 hour. All this way in 1 hour. Very simple. Sounds like I'm speaking to a child at the moment, but hopefully it gets it in your brain. So our higher time frame bias, this is where we want to determine sort of if we're bullish or bearish on the day. We'll look for our session highs. All these draws on liquidity we look for on these higher time frames. Usually on the 15 minute is where I tend to go to because I can sort of see market structure on a lower sort of time frame, but also on a higher time frame. That's where I look for. Obviously, you'd look for your unfilled 4 hour, 1 hour gaps on the 4 hour and 1 hour time frames, and then 15 minute is where I look for my session highs and lows. You can only use this this indicator on 15 minute and below. You can't use it on 1 hour and 4 hour time frames. So I get my unmitigated gaps here. Then I'd move to the 15 minute, mark out all my session highs, my session lows, and then I would go onto the 5 or 15 minute. I'd look for the direction if we're moving up, down, bullish, bearish, consolidation, blah, blah, blah. And then that's where I would look for a retrace in price. So I would want to see if we are moving up, we have a high, hold up. If we have a high quality draw on liquidity up here, say it's a London high. If I see we are moving up like this, and we've sort of confirmed the draw on liquidity wants to be higher because we are pretty close to this draw on liquidity, and I see a retrace into a 5 or 15 minute fair value gap, which will be taught in the next video, and then I see us move higher with confirmation, I will enter a trade. So our retrace or directional sort of time frames are the 5 or 15 minute. That'll be taught more in the next video too. And looking for entries will be on the 5 minute and the 1 minute time frame. I also use the 2 and 3 minute. Sometimes I would just recommend sticking to the 1 minute, 5 minute, 15 minute, 4 hour and 1 hour time frames. So I'd look for an entry throughout these time frames. Your entries will be taught soon in the next few videos. Entries are inversion fair value gaps and CISDs, and then also partially displacement, but entering off of a proper confirmation like CISD or inverse fair value gap will make your trade more high probability. That is sort of everything covered in the video today. That is a lot of like yap and ramble. My voice, my throat is dry as shit right now. Hopefully that all sort of makes sense. If it doesn't, then once again, just DM me and hopefully I'll be able to help you out, or I'll be able to help you out in the free Discord. But hopefully that's sort of very clear. Take a screenshot of that, journal this down, write it down. Very important things to do. Should have said that at the start of the video, but it's okay. We're learning here as well. Never made a boot camp. That's sort of high time frame alignment, bias, and draw on liquidity all covered. I hope that makes sense. I will catch you in video number 5, I believe. I have no idea what that's going to be at the moment. I think it's teaching you what fair value gaps are. So yeah, I'll see you for that. Peace, boys.